took Motilal Oswal from 1300 crores to 42,000 crores. What was that experience like for you?
People who are fixed income by mindset, in their investment side, they should be risk seeking. But what happens is that people who are big promoters and founders, the ones who have taken risk, they continue to take risk. I was lucky to find a perfect balance. I have done a couple of highly entrepreneurial stints, and on one hand, I am a salaried individual at some extent.
What you learned from working with some of these founders that you did, Prashant Khemka, Ramdev Agarwal?
They are in very challenging positions because they have the capital, or they are at least staking their capital, and then they have the maturity and flexibility to get a professional to run it and strike a balance, which is that allow the professional the leeway and yet ensure that none of the guardrails are busted. It's a very delicate balance.
Just yesterday there was a massive correction because of the tariff, and Trump is causing a lot of geopolitical tensions around the world. How are you looking at the broader macro picture?
People focus a lot on the US president's personality, but the reality is that somebody had to do what he's kind of doing, right?
There's also a big debate about India versus China, right? There's Indian investors who want to invest in China, and there is definitely a lot of capital which is going towards China. Where do you see the evolution of both these economies? Hello and welcome everyone to the India Opportunity Show. Our guest today is Aashish Sommaiyaa, who is the Executive Director and CEO at White Oak Capital Management. He's had a fantastic run in the mutual fund industry. He took over as the CEO when he was 35 at Motilal Oswal at 1300 crores asset under management and scaled it to over 40,000 crores. In this conversation, you'll get to hear a lot of first principles thinking and his contrarian takes about the market. As someone who's lived through so many market cycles, Aashish distills perfect wisdom for anyone who's investing in the stock markets today. Hope you enjoy watching. Hi Aashish, welcome to the India Opportunity Show. Thank you for making the time to be doing this with me today.
Thank you. It's an honor. Thanks for inviting me.
Let's start with your journey of moving from ICICI Prudential to Motilal Oswal, because a lot of founders and operators watch this show and a lot of them think about creating wealth for themselves, having more skin in the game, and also asymmetrical returns. And that is something that you experienced in that transition where you took Motilal Oswal from 1300 crores to 42,000 crores. So reflecting back on that journey, what was that experience like for you?
So, I think one thing I've learned is that a lot of times when you ask somebody about their past or about some decisions they have made, I'm very wary of perfect backstories. So I don't believe in perfect backstories, and I don't think there are any perfect backstories. I mean, you should be very suspicious of people who say that this is what I wanted, so then I did this, and then along the way I did this. ऐसा कुछ नहीं है. It's just that for some random reason, I had a boss, when I started my career out of NMIMS, I'm not naming names, but I used to follow someone who became CEO at 32.
Right.
And then somebody who I count as my mentor, a big influencer in my life, he became CEO at 34. So for some unexplained reason, I thought that I want to be a CEO by the time I'm 35. So when I was 35 years and few months old, a headhunter, met me, and he had a chat with me, and he found me to be a suitable candidate, or ticking the boxes which the founders or promoters of Motilal Oswal might have given him some boxes to tick. So I met him for a coffee, the headhunter, and I ended up ticking a few of the boxes. And I was invited for a meeting, and that's when they were actually looking to re-strategize. So while I ticked some boxes for them, thankfully, the reality also is that the first guy who offered me a CEO's job, I landed up for the meeting. Okay, so let me put it that way. But yeah, on your question, the reality is that, look, I don't think that I had the risk appetite, and I don't think that I'm like very many other entrepreneurs that you invest in, who are like following their dreams, and they take, leave their jobs and take a huge risk and take the plunge. I've kind of found a mid path because I would say I'm a professional entrepreneur and a professional CEO. So it's not my capital on the line. But yeah, I do take some risks by helping, or a couple of times I've had the good fortune to help a visionary founder set up a business, roll up the sleeves and do the execution for them. So I would say definitely Motilal Oswal and Ramdev Agarwal are visionary founders. And now, of course, I worked for them for 8 years. And then I had the good fortune of meeting Prashant Khemka. He's obviously a visionary founder. I mean, what he's built in the last 6-7 years is unparalleled, actually. So yeah, I just get lucky along the way to execute certain visions that some visionary people have, right? But I'm taking maybe some career risk or some professional risk. So that's why I say professional entrepreneur. But it's not my capital on the line. So I wouldn't claim to be as entrepreneurial as someone like you or some of the people that you actually invest in.
Yeah, but there's so much to be said that not everyone needs to be an entrepreneur and founder. Also, you can be a
Yeah.
great entrepreneur, as they
Yeah.
call it, within the organization, and that's what you've done, right?
Yeah,
Primarily.
so that also is true that organizations need more entrepreneurs. See, there are so what I've seen is I'll put it this way because I'm from the world of investing. So I look at it this way that people who are fixed income by mindset, meaning somebody who thinks that their survival depends on a monthly salary.
Yeah.
So if you apply the fixed income definition, they tick the box, right? Because they're fixed income by mindset.
Yeah.
Now, in the real world, people who are fixed income by mindset, in their investment side, they should be risk seeking.
Yeah.
If by employment, if you're fixed income, then at least on your investment side, you should be a bit more risk taking, meaning more equity oriented or more entrepreneurial.
Yeah.
But what happens is that people who are fixed income by mindset are fixed income in their investing also and in their risk aversion also. And people who are big promoters and founders, the ones who have taken risk, they continue to take risk
Yeah.
all along. So it's a so I think I was lucky to find a perfect balance, which is that I have done a couple of highly entrepreneurial stints, and I'm on one hand I am a salaried individual at some extent. I mean, you can
Yeah.
debate the mix, but that's how it is. But I do feel that people who are salaried individuals, they need to look for the right risks which they
Yeah.
can take and which they can execute. And that's why I feel that organizations need more entrepreneurs. I mean, as a CEO, I would love to have people who come and tell me what to do or what I should be doing or what the firm should be doing.
Yeah. No, there's so much to be said about that mindset also, right? Like, how does one find that perfect balance that you did in terms of being able to be a little risk taking, even if you are a salaried individual? Because that's majority of our population in India.
Yeah, because what I felt was that two or three things which I must have definitely picked it up from the leaders or from the people I worked with or maybe
Yeah.
from my parents. But two or three things which I can say about myself, which is that one is that I like to do new things. So even as a CEO, if you tell me that, say for example, at a point in time, the previous organization I worked with Motilal Oswal, I was recruited to strategize and get active management, scale the alternates. At some point in time, we again brought back passives.
Yeah.
So we did multiple things. Now, if you ask me that as a CEO, you run a steady ship, come at 9 in the morning, travel 7 days a month, do reviews of people, meet stakeholders. That is my job, but I cannot do that forever and ever and ever.
Yeah.
As a person, I need to do new things. I need to take new initiatives. As a person, by nature, I'm not a status quoist. Um, by nature, I'm not a person who holds fort, in that sense,
Yeah.
right? So yeah, I mean, so I need to do new things. I need to question what is the done thing, like why is everybody doing the same thing?
Yeah.
I mean, I do have a contrarian streak, at least I think so. So yeah,
No,
so
it
those
reflects in
things.
your investing history as well, which we'll dive deeper into. But just want to dive a little deeper in terms of what you learned from working with some of these founders that you did, Prashant Kemka, Ramdev Agarwal. What did you learn from these guys?
So two or three things. One is that they are in very challenging positions because they have a vision, they have the capital, or they are at least staking their capital, and then they have the maturity and flexibility to get a professional to run it and strike a balance, which is that allow the professional the leeway and yet ensure that none of the guardrails are busted. It's a very delicate balance,
Yeah.
right? If you recruit somebody who has been doing the same job for 25 years, like I've done nothing other than work for a mutual fund company now for 25 years.
Yeah.
So so these are people who are staking their capital. They are depending or at least entrusting someone to execute their vision. It's a highly regulated industry. So you're handing keys to someone, right? So I think the balance that they strike in both the cases, what I've seen is that they strike an amazing balance.
Yeah.
They, you don't do anything which risks the vision, risks the brand, but at the same time you give complete latitude to execute.
Yeah.
Right. So I think it's a very difficult balance to achieve. And in both the organizations I have seen, or with both the founders that I've worked with, the other thing is that, say, for example, when in 2012, when I quit ICICI and took up a job at Motilal Oswal, and now there are very young people in the industry, but when I became a CEO, I was the youngest. I was 35 years and few months at that time.
Wow.
Right. So to have the vision to hire somebody and trust them, right? And I was becoming a CEO for the first time. They knew what they wanted in a person, right? But obviously, everybody has some strengths and like a dozen other weaknesses.
Yeah.
So you hire somebody first time CEO. So I think the mentorship, mentorship from founders there, mentorship from Prashant. I think those things play like a huge role.
Yeah.
You need backing, you need mentorship, you need latitude, but you need guidance. So it's like a delicate thing.
It's a very rare combination to get right also, right? Because
I can't do it for sure.
Yeah, like a lot of founders and owners don't want to let go of that control. They want to have the full control and be able to navigate the ship in their direction.
So I've seen it twice that I know there are people who can do it.
Yeah.
And I know also that I value it a lot because I can't do it.
Yeah. So. But just being around such people, what were some of the reflections, if you just look at their journey, what were some of those inspiring stories that you've taken from those experiences? And finally, when you joined White Oak, at that point it wasn't what White Oak is today. Let's talk about that journey of evolution as well, because how from mutual funds, now it's become White Oak Capital. Let's talk about that journey a little bit.
So if you see in each of the cases, what happens is, let's understand the first thing, that the mutual fund industry or investment management, whether it's portfolio management services, alternate funds, global funds, mutual funds, whichever way we look at it, they are ultimately just licenses which enable you to deliver certain services.
Yeah.
But at the core, if you really see, it's a business of investing. And in a business of investing, the 90% rule of the business is investing. So you can be a great sales guy, or a strategist, or a CEO, or operations guy, a digital guy, whatever you may be. If the investment delivery or the investment acumen of the organization doesn't stack up, then there is precious little that you can really carry on. On the other hand, it is equally true that a great idea which doesn't reach the intended audience is then, after all, not that great an idea.
Yeah.
Right. So what happens is that it's a industry where investing is the main thing, but then obviously it's highly regulated, right? You need scale, you need to reach out to people, you need to service them. Technology keeps changing. It's highly competitive industry. It's an industry which has grown 20 times. The equity mutual funds have grown 25 times in last 12 years.
Wow.
Right.
Yeah.
But it's very competitive. So in this whole kind of environment, what is happening is, when you're executing a business plan in such a vast industry, believe me, Shrishti, you're looking for some corner, crack or crevice where the door is open, and you're looking to find your way in. So it's all about, where is that door open, where I can bring in the smallest of differentiation, or the smallest of refreshing communication, right? And I think that's where, because see, the industry is so regulated that you can't have some massive differentiation. You can't just do something totally different from what people are doing. When we file for a fund, within the next 3 to 4 days, it's on the regulator's website, because it's a public offering, right? So there's nothing which is secretive, or there is nothing which is highly differentiated. But within an industry which to the naked eye looks like it's all the same, but when it hits the customer, or when it hits the trade, as you can see, we are able to make subtle differentiation. So building a firm is all about, identifying your right to win, identifying where is that gap in the door which I can, get a toehold and then find my way, and then, exploiting that whole situation. So,
do you want to take some examples of, in your personal journey, what were some of the things?
Examples, See, I'll give you, say, for example, when I joined Motilal Oswal in 2012, right? It was an environment where many global asset managers were quitting. They were selling and exiting the country, and not naming names, but there'll be at least 10 of them. And we were actually a domestic fund house who was looking to re-strategize and get going.
Yeah.
At that point in time, the industry was 70% fixed income. So I'll tell you the numbers. I think the industry was nearly 8 lakh crores. Okay. And equity mutual funds out of that was just 1.7 or 1.8 lakh crores.
Wow. Okay.
Now, for record, the industry is above 60 lakh crores, but equity is nearly like 42 or something like that, right? So it's flipped. Today, the industry is 70% equity and 30% fixed income. And back then, the industry was 25% equity and 75% fixed income.
Right.
And when I joined, somebody, obviously I knew that I knew what I was doing. Somebody remarked to me that, man, you have like some guts because you're joining a firm which doesn't manage fixed income. So which was, by the way, a strength because you're doing equity.
Yeah.
But, one of the learnings, we read all of these in our B school, focus and differentiation and stuff, very old concepts. But I learned very early in life that your positioning is built by what you say no to. Look, if I come and tell you that I'm good at managing equity, you'll say, so what? 45 guys are telling me that. If I come and tell you I don't manage fixed income, oh, so then you must be good at equity. Otherwise, how are you surviving, right? How are you keeping lights on? So I learned that your positioning is built by what you say no to.
Very interesting.
Your positioning is never built by what you scream from rooftops. If you want to scream from rooftops, you scream what you don't do, because that builds the positioning. Then I'll give you a couple of other examples. So say, and it happens, like say now, in the last 1 year, there's hue and cry about small cap funds attracting a lot of money. And now, small cap is down 20%. So what will happen? We don't manage a small cap mutual fund.
Oh, you don't? At White Oak? Okay.
Because I have been around 25 years. I know that every third or fourth year it falls 40%.
Yeah.
And then the whole story starts all over again. Right? So if I don't have a small cap fund, just imagine I've been looking like a fool sitting aside when 40% of the flow is going into small cap. And there is a team out there who thinks, what the hell is this guy doing? Right? 40% of the industry was small cap funds, and this guy is not launching a small cap fund.
Yeah, like last few years, everyone was talking about 30-40% returns in their portfolio, in their small mid-cap
So
portfolios.
you have to take a lot of pain and pressure to stand on the side and say that this is what I don't do.
Yeah.
Right? And then once in a while when 2025 comes, then people realize that ye to yaar open-ended fund mein nahi karna chahiye. Because it's so volatile, the asset class, that the money comes at the peak. Right? After the last 1 year, 3 year, 5 year looks fabulous, then a lot of money comes in.
Yeah.
After a lot of money comes in is then you're primed to go down 30%. So when the asset class is so volatile, timing is important but impossible. And when the asset class is more volatile, it becomes that much more critical and that much more impossible. So we manage small cap only in AIFs, like 500,000 crore corpus, close-ended fund, limited exit windows, limited entry windows, and then we can do all the illiquid pre-IPO, SME, micro-cap, whatever we like. But we don't do. So what happens, sometimes you have to say no. Yeah. Like even in our mid-cap fund, we didn't take lump sum money. We only allowed systematic transactions. It's such a huge industry. Our mid-cap fund is only 2,000 crores because of that. So what I'm saying, time and again, I have seen that there's this huge compulsion in people to think that they should not miss the bus.
Yeah.
I have learned in life is that when everybody is looking to jump and catch the bus, that's your opportunity. Because if you stand on the side and don't catch that bus, you'll be the only one left standing, and that will define your positioning.
Yeah, because I'm sure last few years, everyone must be telling you, why aren't you doing small cap fund? Yeah. And you had no amount of FOMO in terms of...
No, so Prashant, who's our founder, and our CIO Ramesh and myself, I mean, obviously we make some decisions, we discuss few things. But yeah, we had to really just wait it out and stand apart. And, so those are the things. Like say, what products you launch, when you launch them, how do you position the brand, what do you do differently? I think those things are very important, especially if you are AMC number 40 or 41.
Yeah.
Right? See, the big guys are the 1,000-pound gorilla. I mean, they should by definition be a supermarket. They should do everything.
Yeah.
But when you are number 40, you have to really work hard to stand apart.
Yeah.
And that cannot be just in your words. You really have to demonstrate.
No, absolutely. And, this also must be a trust building exercise, right? Because if your customers are seeing you do the right thing, even in the times where, everyone
Yeah.
is just launching schemes left, right, and center, thematic schemes, sectoral themes, then you're standing out in one way as well, because
Yeah,
it
you
helps you
have to
build
be
trust.
counter-cyclical.
Yeah. Absolutely. So now coming to the evolution of the mutual fund industry, since you touched upon that, what are the big shifts that you've personally seen? In a way, you've also grown up with the mutual fund industry of
Yeah.
India.
Yeah. So we're just lucky to be in the right place at the right time. I mean, say in late 90s, I studied as a chemical engineer. I worked in a factory for a year and a half, couple of years. Then I realized they pay engineers really badly. So then my sister told me that, भाई तुम कुछ पढ़ाई कर लो, इससे तो होगा नहीं तुम्हारा कुछ. So I studied finance in NMIMS. And how I ended up, like you said, enjoying the ride, or, just being in the right place at the right time, was part of it was luck. Second thing was, if you see, nobody who was a chemical engineer and MBA in finance went into sales.
Yeah.
Like people who were my classmates. Somebody right now is running a investment advisory firm. Somebody is a venture capitalist. Somebody is running corporate banking in one of the big banks. There's somebody who's in US as a, most of them are engineers who are in US. So nobody with my qualification went into sales. And late 90s, very early, I realized that all of these guys are so smart, they all are going to become portfolio managers. So apna to number lagega nahi kabhi. I'm not, I won't be able to do all this. I'm not so smart. So, I'll be like a suboptimal guy. So I thought, let me do sales and sales also, aisa bhi nahi ki there was some zero, like some major inferiority complex and zero level of confidence that, I can be a salesperson. But the difference was that you met Kalpen, of course, he's my friend.
Yeah.
So there was a difference. He's my senior from college and also my senior from ICICI. But there were only two guys in the industry who used to roam around with laptop and tell people about rolling return and standard deviation and all in late 90s, mid 90s. So that was like, at least we did something differently or tried to explain to people what goes behind all of this.
Yeah.
So that's how, and then in 1998, one thing happened, which is that the government of India from that time onwards made every effort possible to give boost to capital markets.
Yeah.
So because what happened was interest rates got deregulated. Dividends from mutual funds became tax-free in 98. So it was like, the whole, and then, the financial services industry, thanks to our regulator, and RBI and SEBI, has been the one to digitize the fastest. I mean, I've been working for a mutual fund company for 25 years, and Shrishti, for 25 years, we've had a website on which people can do transactions. So this is when internet was about brochure websites and yellow pages, but we still had transactions in late 90s, early 2000s.
Amazing.
So what I'm saying is that our industry digitized the fastest. We benefited from interest rate deregulation, and we benefited from the fact that the government really wanted to push capital markets. If you see from the mid, say 2014-15 onwards, the government has been pushing even pension funds to put money into.
Yeah.
So we don't manage pension funds, but it increases the awareness of equities because people realize even pension money is getting into the stock market.
Yeah.
So then they'll be more open to investing in a mutual fund. So these are the major changes. And the last change I'll tell you is habits change with generations. Right? I mean, if someone were to tell you that, Shrishti, you will get 10%, but go and invest in the post office scheme. You'll say, yeah, uska UI UX बहुत खराब है यार. I mean, I'm not going to do it, right?
Yeah.
So habits change with generations. Apart from whatever I told you about the macros, it's just sheer habits.
Yeah, now it's all gamified on an app, always available. You're just one swipe away from buying whatever you want. But now, how are you seeing the next decade in terms of evolution? There's so much AI coming into the picture.
Yeah.
There is a new tech wave, so to speak. And, fintech as an industry overall has gone through a lot from unregulation to like complete regulation. And now the regulators are also very strict in terms of, what happens on the lending side, etc. So how are you seeing this industry evolve going forward?
See, so far I have only seen, whether it is my team, our founder, investments team, people in our tech team, myself. So far I have only seen all of us making a lot of efforts on the efficiency front. Right. So when it comes to research processes, when it comes to, data, collation, correlation, analysis, all of those kinds of things. So I have till now only seen, all the efforts towards productivity, efficiency, getting better information, and getting better presented information. I think that is all that I have seen till now. I haven't seen as of yet, very wide-ranging execution-backed, AI-backed execution as of yet. But I do feel that, there are many jobs which were drudgery, legwork, right? The simplest of things, for example, our industry has the best possible data. So I don't know if you know this or not. The industry publishes every week, inflow, outflow, geography-wise, channel-wise, product category-wise. So it has the best level of information. So which means that we have a lot of data-backed reviews. Now, for example, my pet peeve is that when people come to a review is when they're reading data. Correct? If we use good models, if we use good, data analysis, right? If we use even the most basic application of AI, we'll get much more what you call, action-oriented, more action-oriented data. Or people will not be expected to read or analyze. People will just come with, like, I'll give you an example. This is not actually AI, it's more like data analysis. Like I travel a lot, I travel 15 days. So there is somebody in our office who's started to experiment with me only to see how efficient or how effective I am. So they're collating my travel data, they're collating the whole industry data, they are collating our sales data. They're collating data of all the distributors who I meet or present or do public speaking to. And then they're trying to find out various, input-output combinations to understand what is the result of all the efforts that we make, right? Now, this can go one level further in straight away rejecting certain initiatives or accepting certain initiatives.
Have there been any findings through this process?
So we are working on it. I think, obviously there will be findings. We'll just have to go back and refine the models, and I hope they don't have to change the CEO saying, this guy runs around a lot, but he's not effective. But I think what will happen is it can just go all the way into accepting, approving or rejecting initiatives, travel requests, expenditures. It can go like the whole hog, like certain things can get. So I think it's more about efficiency and better decision making is what I've learned till now. I don't think that I'm like at the frontier of what people are doing. And I've not seen anything in the industry to tell me that, when it comes to investing, things are, getting changed in a big way.
Which here I'd like to ask you about passive versus active investing, right? Because a lot of, at least in the US markets, it's almost 50% is passive and 50% active. And right now in India, passive is not that widely accepted, right? It's like growing, but still slowly. Because people really value active fund managers. Some of them have cult-like followings almost. So what do you see the trend shaping up as? Are there any changes that you personally observe?
See, I think you should be the most excited because if you actually see US data, so everybody in our industry and everybody in public markets or even on media, television, they all say that, passive is gaining share and active is losing share. But even if you see US data, it doesn't say so much that money is moving from active to passive. It says a lot more that money is moving to alternates. That is the real story. The real story is not active to passive. The real story is that money moving to alternates. And in US, obviously, I don't have exact statistics, but I believe private market is much bigger. Like you compared active and passive. If you compare public market and private market, and then you compare India with US, those equations are a lot more stark. So, what I've learned is that if you see any discussion on active passive in India, in the third or fourth minute, it moves into because there is no alpha in US, there will be no alpha out here. But if you study the US market, they tell you that there is efficiency because of institutionalization. But what goes unnoticed is that institutions put 65% or 70% of their money into alternates. Right. So the data suggests in US that in last 30-35 years, their market cap has gone up 5x. But number of listed companies has nearly halved. And take an example of, say, buyout funds. They've gone from practically 0 to 2 trillion plus. I believe last year and data was reported that the dry powder of PE funds in US was over $1 trillion. Now, if you see in India, we are nowhere there. Institutions started investing in equity a few years back. Institutions are not big in private markets. Of course, family offices and individuals are, but institutions are not big in private markets as yet. the number of listed companies is expanding rapidly, correct? If you see what you will do to generate alpha in US, you will have to buy one of Mr. Musk's companies, or you'll have to be at the frontier of the new tech. In India, Sev, Bhujia, Farsan, potato wafer is still getting listed.
Yeah.
So what we should keep in mind is just 2-3 things. In US, for example, it's not just about the finance, it's also about marketing. Take an example that I tell you that I was supplying, let's say I was a supplier of A-rated beverages to you. For example, say Thumbs Up, Coca-Cola, what have you. I suddenly realized that you are a big family office, institution. And I find that there are some other people who have been supplying this A-rated beverage to, who are, say, individual investors. So let us say to all the individuals I go and say that, look, I've been selling you this beverage for 100 rupees a liter, and it's not good for your health. It's fully sugar. I think आपको तो soda water या tonic water ही पीना चाहिए.
Yeah.
And I'll supply it to you for 10 rupees a liter. And don't buy this aerated beverage, it's full of sugar, not good for you. So I tell them that you should buy 10 rupees a liter soda water. And to you I come and say, ma'am, देखिए क्या है कि काफ़ी समय से हम आपको ये 100 रुपये लीटर का बेवरेज सप्लाई कर रहे हैं. 90% of it is just water and gas. Why do you want to even buy this? Rubbish. So कल से हम आपको केवल कॉन्सेंट्रेट सप्लाई करेंगे, फिर आप करो जो करना है आपको उसका. हाँ, लेकिन उसका 2/20 होगा, 10 रुपीज़ पर लीटर नहीं होगा. 2 रुपीज़ फिक्स फी, 20% of the alpha. So it's not that there is no alpha. I mean, obviously we're not here to discuss beverages. It's not that there is no alpha. It's just that the alpha and the beta have been, stripped off.
Yeah.
So you're selling beta to the Aam Aadmi at 10 basis points or 5 basis points, and you're selling alpha to the institutions at 2/20. So India में भी होगा, but we are not there yet.
Yeah, I'm seeing very nascent signs of that happening, because I think family offices also
it will not happen because of this alpha beta discussion.
Yeah.
It is happening because ultimately private markets, we all read American books and we are all American educated and American literature. So we do follow them.
Yeah.
But yeah, sorry to interrupt you, I think it will happen in 10-15 years.
Yeah. So you see private markets becoming the bigger piece of the pie?
Absolutely. Absolutely.
And in terms of evolution of White Oak Capital, then how would you be looking at something like that?
So we are ambitious. Our founder is ambitious and we are highly capable of doing it. In fact, so we already, the funds where we are allowed to, for example, we at least do crossover or pre-IPO already.
Right.
We are about to hit the market with a pre-IPO. And then,
that's a very interesting space that is seeing a lot of traction, right? Pre-IPO.
So the idea is that, over the number of years, because ultimately, definitely there are differences in terms of how you evaluate businesses in private and public.
Yeah.
Right? But we have the largest research team in India. We are like about 46 people in fund management. We cover India, we cover emerging markets. And we've already have a good track record of pre-IPO. So now we are launching a Cat 2 fund. And the idea is to hopefully backward integrate and do even growth investing at some point in time.
Right.
So our idea is to straddle we are equity investors and we understand the difference between private and public, but the idea is to straddle the chain at some point in time.
Given that what's happening in the pre-IPO space, a lot of SME IPOs, that's also where a lot of froth is, unfortunately. What are your thoughts around that?
Yeah, see, clearly we have to, so it's not that we say no to, it's like there's no. There is precedence of us having invested or participated in SME exchange also.
Yeah.
Right? But then we'll do our diligence and go company by company. But otherwise, yeah, it just became like a ticket to stardom, or it just became like a ticket to riches, whereby, people were just left, right and center participating in anything and everything. That happens in frothy market conditions. And I think that people should see, it's like, there's large cap and mid cap and small cap and micro cap and then SME and then the whole thing. So clearly the risk increases, the liquidity goes down, volatility increases, the number of listings and the quality suffers. So I think people have to go stock by stock.
Yeah.
We are not averse to anything, but yeah, you have to go stock by stock and you have to do your own diligence. It's very important.
And a lot of the times, the pre-IPO, the new age stocks that I've listed, a lot of them after a few months were at the same price that,
Yeah.
you bought in at maybe pre-IPO also.
Yeah.
So a lot of family offices also got a little skeptical that why am I buying pre-IPO? Why not just wait for it to
Yeah,
list and
list.
buy when, there is a correction in those stocks. And that's been a personal learning as well. And like a lot of people I talk to as well. So what do you have to say about something like that?
See, stage of the market when you buy it matters a lot.
Yeah.
At some point in time, pre-IPO becomes momentum investing, right? But markets like this, it's expected to be a bit more realistic, correct? So it depends at the phase of the market, and it depends how easy. See, like normally very well. I've heard you also that you need to have access to deals.
Yeah.
Now, when access comes looking for you, right, you need to understand.
Yeah.
If everybody and anybody is being called up and offered that XYZ company available.
So
right?
much
many
of that
calls,
is happening,
right?
no?
So
Yeah.
when you get so many calls,
Yeah.
and when you say that okay, otherwise I find it difficult to get access on deals, but right now people are dying to have me on the table.
Yeah.
So that's an example of that when things look very easy, then you need to be careful. So I think it's a question of which phase you invest in. Second is obviously, how comfortable you are holding it, even if the price, goes up and down.
Yeah.
Because if you're there to make a quick buck, and then ultimately it's momentum, it's not necessarily going to hold up. So I think market conditions, how much of a contrarian you are, how much is your understanding and research, how much you can hold on. I think all of those. And see, for us, for example, we would not be, we do it in funds which have like, say, close-ended tenure or something like that.
Yeah.
Right? Many times, a lot of family offices or individuals might be doing it saying, I'm a long-term investor. But then the price really impacts their,
Yeah.
holding power. So I think all of those things have to be kept in mind.
Yeah, and we spoke from the family office perspective, but let's also talk from someone in their 20s and 30s
Yeah.
building their portfolio, because there's a lot of bullishness around new age tech, right? And a lot of these brands are actually things that people end up using on a daily basis, which is why they sometimes end up investing in these companies. How should a young person today build a portfolio? I've heard you say that don't label businesses as small, mid, and large cap because the lines have blurred. So how should a young person think about building a portfolio?
See, I assume that when you're asking, I find one thing very odd that, when people are looking to build their portfolio, a lot of times people ask me this, that, you're a mutual fund guy, so you will say mutual fund, so keep that aside. And I want to build my portfolio, tell me what to do. So let's say, assume that you're talking about direct equity. I always ask people, which industry do you work in? Right? I mean, say, take an example, you remove my CEO hat and say that I have some experience of asset management. Okay?
Yeah.
And let's say I'm looking to invest in direct equity. Now, where should I start? I should start with the industry which I understand. Right? Like you may have your family business. You may have, the sector in which you are employed. So that's the natural place to start. If I have to start investing in direct equity, then I should be either investing in asset management, wealth management, or broking or something, because it's not like I'm an expert, but at least if there is some chance in hell of me knowing something that is in the industry in which I worked. So I find it quite odd that when people are beginning their journey, they're like, chemicals अच्छा करेगा. मतलब तेरा क्या लेना देना chemical के साथ, right?
Yeah, defense or manufacturing or railways will do.
हाँ,
really
मतलब
well.
तुम्हारा क्या लेना देना उसके साथ यार, तुम जो इंडस्ट्री तुमको समझ में आता है उसमें करो, लेकिन वो आजकल चल नहीं रहा है, तो कभी तो चलेगा ना यार.
Yeah.
So I think first is that you should know where to start, and if you have a bad start, then you're done. So it's better to start from the circle of competence.
Yeah.
Even if you're not fully competent, at least you'll be able to meet the right people and ask the right questions. Probability is higher. So people should start from the sector or the industry in which they work and where they claim to have some understanding, and then take it on from there. Because then what will happen is, it will allow you to develop some framework, or it will allow you to develop some mental models which will then apply to something else also, or to adjacencies also.
Yeah. And what are the fundamental metrics one should look when evaluating the companies within their circle of competence, hopefully?
See, I personally feel that, everybody doesn't need to become an analyst and a portfolio manager who's going to beat the benchmark by a few percentage points of alpha.
Yeah.
Correct. So I think that when it's an individual investor, and I am not a portfolio manager myself, right? So what I would put it this way is that as an individual, you need to get the direction correct. When you talk about any company, what do I mean by direction itself is 3-4 things. One is obviously the public perception, the management, the governance, right? You don't need to do scuttlebutt of some interviews of some 25 people and triangulate so much information. If you read a lot, public sources of information, talk to 3, 4 people, talk to some chartered accountant, some auditor, right? You will have a sense of what is the reputation of the management and the governance.
Yeah.
Right. Second thing is that you see whether they are in an industry where they have some differentiation or some competitive advantage. This also doesn't need like massive amount of, if somebody is in an industry with 10 players, if somebody is in the top 3,
Yeah.
or if they have products which are different from the others, or if they have margins which are different from the others, or brands or technology, right? So look for governance, look for differentiation, look for scalability of the industry. Right? It should
Yeah.
not be like some sunset kind of thing. So for most investors, this much is actually enough.
Yeah.
Everybody doesn't need to become an analyst who has to sift through 20 different companies and arrive at one.
Yeah.
What most people make mistakes in individual investing is 2 mistakes. First, you're trying to analyze what is already working. See what happens. How does somebody in 2023 or 2024, how does somebody start learning about a defense company?
Yeah.
Right? It's not your original thought. It's all over, it's splashed all over. And then you're trying to research.
Yeah.
So the decision in your mind is already made, then what research you're going to do? Correct? That is, so what happens, most people individually at least, see what happens with institutions. The moment we call it a mutual fund scheme or a AIF or a portfolio means it has some benchmark. It means it has some investment constitution, some universe.
Yeah.
So however much we may get carried away, basically we will not go crazy. I mean, there will be some tethering of our portfolio to the benchmark that we need to beat. When it comes to individuals, what I find is that they call it a portfolio. It's just a list of stocks. It's not a portfolio.
Yeah.
Right? So what is happening is, how do you arrive at defense, railway, infra and all these things? Is because that is what is hot and that is what you started researching.
That's the media hype.
हाँ, तो डिसीजन तो आपने कर लिया ना, अब रिसर्च करने को बचा क्या है? आप रिसर्च इसीलिए कर रहे हो क्योंकि आपको खरीदना है वो, तो उसको तो रिसर्च बोल नहीं सकते आप. सो यू विल ओनली एंड अप हैविंग व्हाट इज पॉपुलर एंड व्हाट इज हॉट. सो दैट इज वन mistake which people make. Second, obviously, is related to is that individually we find it hard to be contrarian. See, 1000 बार people will say be greedy when others are fearful, be fearful when others are greedy. उसमें सबसे important word greed and fear नहीं है, सबसे important word others है. Correct?
Yeah.
So, if you're already researching what is flying, then you're not part of the others.
Yeah.
So those are the key, mistakes which people make when they're investing individually. You need to have some level of research which is very basic. It's not like you need to become a master in accountancy or something.
Yeah. Yeah. Let's dive into the contrarian aspect of your personality, because how does one inculcate that?
So you have to. I think it manifests in multiple walks of life. You cannot be a contrarian in investing, but otherwise be a conformist.
Yeah.
It's a personality trait. मतलब मैं ऐसा नहीं बोल रहा हूँ कि there will be many things where I'll be a conformist. Meaning, for example, if I have to eat out, right? I eat at few places and I generally eat the same thing.
Yeah.
Right. So I cannot say to that extent. But in certain areas or in certain, like I'll give you an example. Everybody in my class wanted to be a portfolio manager and they are, and some of them very successful. So I realized कि ये अपने से नहीं होने वाला है. It's better not to. That let me get into, say, sales, for example.
Yeah.
And in our industry, sales is not actually selling. See, I have to understand what the budget is, what the economy is, what fund managers and analysts are talking, and then I have to talk to a guy who's investing 100 rupees in an SIP. So it's not the sales which वो चश्मे बद्दूर मूवी में था ना, बेल बजा के साबुन बेचने, वो सेल्स नहीं है ये. इट्स वेरी कंसल्टेटिव एंड you're meeting people with 1,000 crore treasuries and you're meeting people who invest 100 rupee SIP. Like someday I'll be in a family office in Gurgaon and someday I'll be in Ichalkaranji talking to 700 people.
Yeah.
Right? So, but yeah, so I think getting into sales itself at that time was a different decision for somebody with my background. Not choosing to work with a large, I worked in a very large organization right from being a trainee to being head of a particular business. And then, I joined an organization where I had to strategize and help the founder to build. And I've done that twice over. So that is also not something which normally everybody would like to, if you go somewhere and there's just a plain piece of paper and a pen and you say, okay, now you start. So that becomes very... So by nature, you see, like say, for example, I'm not easy to work with. So a lot of times I'm told that you're not easy to work with. So I say that, so it's my defense mechanism is to say that, if you have to start with a plain piece of paper and a pen, no wonder you're not easy to work with. Right? So yeah, I mean, basically I like to do different things and I like to experiment. And, I think building a business is a hypothesis you're making. So what are we, at one level, what are we producing? At one level, we are producing data and MIS. What is the proof of the fact that we are building a business? Is when more and more data sets start getting populated.
Yeah.
Right? Like a lot of people talk about, say, AI. And, you cannot do that unless and until you have rich data. And, you have neural networks across, straddling the whole, disparate set of data. Right? So at some level, when we build a business, what have we created? We've created data sets. Correct? And when the data starts flowing through, is when your hypothesis is getting tested.
Yeah.
That is the whole excitement, right? So if the data keeps looking same for years and years and years together, I get very uncomfortable.
Yeah, but to make it more tactical for the audience. So, for example, you said that, once the sector is already highlighted in the media, one should not be looking at that, right? So, how does one find the sectors that they should be looking at then?
So, you don't even need to ask me. There are like books and books written on this. Say, take an example. Once I read this book called, I've quoted it before. I read a book called Capital Returns. एक तो क्या है ना कि I read a lot, but I don't. मुझे बहुत rarely याद है कि मैंने एक पूरा किताब पढ़ा होगा.
It gets absorbed in your subconscious in some way.
एक थोड़ा challenge भी है कि भाई there are super brilliant people who have 1, 2, 3 or 4 ideas, right?
Yeah.
5 or say X number of ideas, और but भाई उसको 300 पन्ना भरने के लिए बुक लिखना पड़ता है ना. तो मतलब ऐसा बोला जाता है ना कि भाई lot of books could have just been a blog,
yeah,
right? And lot of blogs would have just been a text message or something like that, right? So I read. तो मैं कभी-कभी just for you and the audience, disclaimer: if I say I've read a book, don't ask me कि भाई 9th chapter में क्या लिखा था. I may not have read the whole book. I may know the idea. So I read this book which said that on your question. It said that कि कौन सा सेक्टर चलेगा, which sector will produce maximum returns going forward.
Yeah.
तो जैसे ही we speak about returns, the human mind thinks numerator, right? The delta change in volumes, delta change in margins, right? We look at all facets of earnings because that's the numerator, cash flow. So this book basically made me realize that it's not just the numerator, it's the denominator which really, really matters. The sector which has maximum consolidation and where least amount of capital has flown in the last 10 years is the sector which will, because a minor delta change in the macros, which can cause a change in volume or margin or pricing power or whatever you call it. Since the denominator has been shrinking consistently, a minor delta change in numerator will throw up as a big change in the return profile of the business.
That's so interesting.
And the people who are left with the denominator are the ones who will really benefit.
Interesting. What are some of the sectors right now?
So right now it's difficult. Actually, see, there have to be some glaring instances, right? Like, for example, till 2020, 2021, the given wisdom was कि भाई real estate में तो कुछ हो ही नहीं सकता है, ये तो सब चोर है, सब young लोग तो घर कभी खरीदेंगे नहीं, सब लोग तो rent ही करेंगे, right? Or till very recently, till 2-3 years back, people used to say कि PSUs तो कुछ हो ही नहीं सकता है, पैसा नहीं बन सकता है, those kinds of things. But massive consolidation, right? They wrote off 10 lakh crores worth of NPAs, bulk of it attributable to PSU banks. They wrote down all the NPAs. The government consolidated. They did not lend for a few years, literally. They cleaned up balance sheets. The government consolidated the number of banks. Whatever amount of capital was needed, so that was a great example of a sector where the denominator kept on shrinking. Real estate back then was a sector where the denominator kept on shrinking. So, filhal na, we are coming off like a massive teji, and the market is just consolidating. So, unfortunately, I'm sure some viewers or maybe even you may have something, but unfortunately, I'm not able to point out anything where the denominator has been really consolidating and shrinking for like few years now. Not sure.
Yeah, I think we're still, even though we have been through a correction, I don't think we're fully there yet, right?
And
to be
see,
able to spot
पिछले
it.
4-5 साल में BSE 500 had some 30-35% CAGR EPS growth, which means like everything is been growing and delivering returns.
Yeah.
So in that environment, to find something where the denominator has been shrinking, at least I can't think of anything, but people might have an idea.
And you, interestingly, because you spoke about real estate, you also made a real estate bet, which you said in one interview that it has done better than your equities portfolio. And a lot of young people have fallen into that trap and debate of
बहुत
like rent
criticism मिला
versus
मेरे को.
buy, right? But your real estate portfolio did serve you well. So let's talk about that as well. How should a young person think about building their real estate portfolio?
So see, actually ना हमारे इंडस्ट्री में ऐसा मतलब some I don't know it's convention or what. Once in fact somebody told me that what are you even talking? You're saying you invest in equity and real estate. Most people I meet, they tell me that they have done their goal planning. They have 65% in equity, 35% in debt, and 10% in emergency cash.
Yeah.
So you're a mutual fund guy. You're saying there is no planning. You're saying equity and real estate. So I said, I am like most Indians. You ask them why they are different. I am not different, right? Most Indians are in real estate.
Real
And
estate and
nowadays
gold
in
primarily.
equity. And
Yeah.
yeah, gold, ठीक है, my wife does it, so I don't count. But the point is that so what I just want to drive home the point, I'm not different. I'm doing what every Indian is doing. We need to ask the people who are doing they should be doing, they're doing the right thing, which is the planning and stuff. But I can't say I'm a very disciplined investor. Now, coming to your point, I think at that time in late 2018-19, there were some liquidity events, right? So 2020, when we talk about, that was the time when I happened to read all this literature.
Right.
I mean, I've been reading for long, but sometimes you just chance upon something,
Yeah.
and it strikes a chord with you. So, and see, real estate, there are 2 or 3 things to keep in mind. One is it's the only asset class where somebody can get leverage. And I personally believe this is again a taboo, but I personally think you should not invest in real estate without leverage. It's not, on a equity basis, it's not very rewarding.
All the Twitter folks will jump on your statement.
हाँ नहीं, लेकिन सी क्या है, सबको बैंक्स का शेयर्स खरीदना है, लेकिन सबको यही सुनना है कि लीवरेज मत करो, तो बैंक किसको लेंड करेगा? मतलब व्हाट आर वी इवन टॉकिंग?
Yeah.
Right? The biggest sector in the industry is banks.
Yeah.
And then all the Twitter gurus say कि बोरो तो करना ही नहीं चाहिए. अरे तो आप बैंक का शेयर्स क्यों लेके बैठे हो? बेच दो सब. See, there is something called healthy leverage, right? And there is something called healthy leverage. And by the way, real estate unfortunately doesn't stack up if you like say commercial real estate. What do all these REITs and all, what do you expect them to do? Like in the US, it's very common for individuals to buy commercial real estate, right? Because it's very, at some level, if you see, it's your EMIs which pay the rent. Right? Say you put $3, the bank puts $7.
Yeah.
Right? And the rent pays the EMI. Correct? People generalize. They assume that, you're going to put all the capital, you will get 7.5% rental yield. What is the use? 7.5% on the whole capital. But if you put 3 rupees, the bank puts 7 rupees. The rent pays the EMI. Your equity starts rising.
Yeah.
Every few years, the rent goes up 5, 10, 15%. Correct? So that is my retirement planning. Because at some point in time, I'll pay it off and then I'll have a income stream from commercial real estate. If you take, for example, residential, people make massive generalizations. Like you want to insist that I bought a house. If I say that I bought real estate, people will assume that I bought it in Lower Parel in 2016. No, right?
Yeah.
I mean, just like equity, it depends which sector and which stock you bought at what point in time.
Yeah.
So I invest only in equity and real estate. I don't invest. And for me, real estate is also a reflection of my conviction on the economy and on equity. It's a factor of production. It is linked to the economy and to equity. So I don't think there's any taboo. I think there has to be a right way of
It's so
investing.
refreshing to hear you say that because, unfortunately, I think a lot of the fintech hype around this has all been around, buy versus
25 साल का लड़का या लड़की को कोई इक्विटी खरीदने के लिए लोन नहीं देने वाला है.
Yeah.
Right? And everybody understands balance sheet. So how do companies make profits from balance sheets? I mean, why do you have a balance sheet? Because there's a spread between the asset and the liability.
Yeah.
Correct? How does an individual do it ever? How can you get a balance sheet? जो फाइनेंस हम पढ़ते हैं, जो कंपनियों पे लगाते हैं, बैंकों पे लगाते हैं, और हमको पर्सनल लाइफ में नहीं समझ में आता है तो देयर इज समथिंग टू रियली थिंक. सो any business is about creating a spread between the asset and the liability. You better make sure it's a positive spread, and you better make sure that there is some healthy way of doing it. Correct? So when I say that you should see, I always tell people कि घर खरीदने वाला है कि नहीं खरीदने वाला है. So some people say कभी नहीं. I say okay, rent. No point even don't even bother. But some people say हाँ खरीदने का है लेकिन देखते हैं. I said भाई जितना जल्दी करोगे उतना अच्छा है. It's not going to wait for you. And then to prove somebody wrong, people say, yeah, but why should I buy? The rental yield is 2%. Right? Now, I'll give you an example. I live in a suburb called Goregaon. Practical example. It applies to a lot of Mumbai, Gurgaon, so definitely. You will say, what small numbers are you talking, right? A house for which rent was 85,000 is today 1.5 lakhs. और rental yield 2% है अभी भी. अब आप बताओ इसका क्या गणित है? It's obviously that the denominator has gone up like crazy. You know, the rent has doubled, but still the yield is same. That means that there is a end user demand there. आप rental yield गिनते रह जाओगे, आपका rent हर तीसरे साल, चौथे साल keeps on going up.
Yeah, people don't value the capital appreciation that happens in the asset.
No, in fact, people make a case कि भाई इसमें तो कुछ return बनता नहीं है, appreciation कुछ होता नहीं है. There were points in time. There are bad builders. There is late delivery. There is a bad locality, right? You made a bad choice, bad timing. तो वो सब तो हर asset class में होता है ना, right? People bought many cryptos, they didn't buy Bitcoin. फिर बोलेगा कि ये खराब है, right? People buy many equities, they didn't buy the right stuff. Then they say equity is bad. So same applies to any investment. Timing can go bad, decision can go bad, the geography can be bad, the builder can be bad. But that doesn't mean you diss the whole asset class, right? I mean, I think there is upside. That's how I would put
That's
it.
real first principles thinking right there. It's truly an example of that. But also, you started a hybrid fund almost 2-3 years ago where gold had a lot of, had an exposure to gold at that point, which was significant, right? And now we've seen the rally and now gold has touched 90,000. So is this still the time to keep investing in gold?
For now, for this year, yes, because I think, when we are in 2025, I feel that it's very difficult to say anything with high conviction right now. Because, the world is in flux. I mean, I'm not saying something profound, but that's a reality. Till recently, it was quite odd, right? The US stock market was going up, US dollar was going up, and gold was also going up. So I told someone gold will win. Because the reason is because, there is a lot of uncertainty. I mean, the US economy is slowing down. People are questioning this whole AI rally. Nobody dares to call it a bubble. After the market falls another 20%, they'll say it's a bubble. Abhi though people are tentatively using words like hype, mania, right? So क्या होता है कि कोई भी नया technology आता है, तो you don't know who's the winner. I mean, in 1999, if somebody told you the winner of internet will be some guy who delivers food to your house, would you believe it? You thought the winner will be the guy who puts cables and routers. Right? So AI is here. I mean, it's going to really upend many things. But if somebody tells me they know the winners, I would find it hard to believe. So the point is that if you take US stock market, if you take US economy, if you take, trade. So in India, the domestic conditions are improving. But whenever the US or the globe is in flux, temporarily stock markets are one stock market. Right? In 2000, 2001, when the tech bubble burst, they fell in sympathy, we fell. In 2008, Lehman crisis, they fell in sympathy, we fell. In 2013, tapering, their market fell, our market fell. In the long term, our markets deliver what our companies' earnings deliver. But in the short term, markets get correlated. So personally, if you ask me next 3 to 6 months, because, again, a long answer, but next 3 to 6 months because of the uncertainty, I think gold will still be in play. That is my belief.
Right.
You asked about a fund. See, there my belief doesn't matter. The fund will follow a model. So if the equity becomes cheaper and cheaper and cheaper, we'll start buying equity. And, to that extent, gold exposure might come down. But standalone, if you ask me, gold, I think it is in play at least for another few months.
Yeah, and touching a little more on the macro picture, because, like just yesterday, there was a massive correction because of the tariffs. And Trump is causing a lot of geopolitical tensions around the world. How are you looking at the broader macro picture?
See, I feel that, I'm trying to read up a lot on this last couple of years. I've been reading, because, say what you call the global world order, obviously that is being challenged,
Yeah.
right? Now, people focus a lot on the US president's personality, but the reality is that somebody had to do what he's kind of doing, right? Because the general belief is that for far too long, since Second World War, the US consumer has been funding, Germany, Japan, China, and many Asian countries. And the US taxpayer, at least that's their belief, that the US taxpayer is bearing the bills for NATO and for,
Yeah.
free navigation on the high seas and stuff, right? So obviously that is being challenged, that you guys need to pay up. So that is definitely going to make a lot of changes in how we are used to seeing the world. One fallout of this is that it's going from being multilateral to bilateral. That is not necessarily, I'm not an expert, but that's not necessarily a bad thing to happen,
Yeah.
right? And from that perspective, I feel that next 3 to 6 months, I would, be very wary of giving any market call or any market direction. I would just say that domestic conditions are improving because ultimately, any decline in US comes with a falling dollar and falling yields. And that
Yeah.
gives a lot of strength to RBI because they are right now in a mood to prime our
Yeah.
economy. So it is good for domestic conditions to that extent. But when you talk about stock markets, there's so much of heightened volatility and uncertainty, different days, different news. Ultimately, what I feel is that we are not in such a bad position because anything which causes, anything which causes a reorg or a reorientation, it might help benefiting us. That is what it looks like on the surface level. And the last thing is that, whichever way we see it, we have some challenges, but the reality is that ultimately we will end up having the biggest consumer force and the biggest labor force.
Yeah.
And you are seeing early signs, so you take industries like electronics, you take industries like auto ancillary. You already have examples of IT.
Yeah.
So in many of these cases, we are making strides. So I feel that over the next few years, we will still stand to benefit. In the medium term, even domestic conditions are improving. But I just feel, maybe I'm repeating, but I just feel next 3 to 6 months, we need to see how everything lands.
Yeah, very interesting that you say that because, I spoke to Jim Rogers and he gave the example. He used to work with George Soros and
Of
they
course.
betted on, the devaluation of the British pound back in the day. And he was so sure. He's like, I've sold all my equities because I think something big is going to happen in the next year or two. Because the world
Oh.
order will change. The US is going to go bankrupt. And he had very strong feelings about these things.
So, see, there is a book called The End of the World is the Beginning. It's written by Peter Zihan. Then there is a book called Mega Threats, which is written by Nassim Taleb. So in the last 2 to 3 years, there has been a lot said. And Mr. Trump became president second time around. But what he was saying was kind of in the public domain for
Yeah.
a long time. And even this time around before election.
Yeah.
So there is a lot of literature and there is a lot of people who have been saying that things are about to change.
Yeah.
And if you see India's government itself in the last few years, I can't say flurry, but there has been some kind of spate of bilateral trade agreements.
Yeah.
And even when US is threatening us, before the D-Day comes, you can see the right noises in terms of progress being made on multiple fronts.
Yeah.
Right. So I think that because the world is in flux, we should be careful. But I'm quite hopeful that whatever is happening may not be too bad for us.
So, in one sense, should one be building cash reserves in their personal portfolios? How should one address this?
See, this is always a very difficult question, because people who are already invested, people who are already invested, for them, I think they should rebalance portfolios, not necessarily in favor of cash. But I feel that, and since you spoke about individual investors and even some mutual fund investors,
Yeah.
even it applies to portfolio managers, for instance. What has happened is that in last 3 to 4 years, if you see the market was very, very, not very, but it was in a situation that everything which is cyclical, everything which is, policy or macro driven, right? Anything which was all this railway infra, PSU, government policy, all of those things were flying. Order books, just on order books, prices
Yeah.
went up. But in a longer term perspective, market is with good governance, free cash flow, ROIC over cost of capital, sustainable businesses. So last 3 to 4 years, a particular segment of the market just got carried away, and certain businesses, which although they were performing, they underperformed massively.
Yeah.
On top of it, maybe FIS selling also weighed on that. So the market, imbalanced. So today, what people should be doing is that they should bring their portfolios in the center of the market. See, when the market goes through a correction, I have seen in my past that people have fond memories of where they made money in the past. And then when that falls, there is this urge to average it and buy more of what has fallen. But past experience says that that is, what will, if the market were to recover, what will work is what has fallen the least. That is at least the past experience that I have seen. So if your portfolio is off center, you take BSE 500 as an index. The index is not growth or value. The index is not defensives or cyclicals. The index is not domestic or export. The index is a blend of everything. And we have to outperform that blend, right? If you say that I will only buy PSUs and cyclicals, then you are playing with half the market or 40% of the market.
Yeah.
And last 3-4 years, we were very lucky because that 40% was in vogue. It didn't matter, you didn't have the other 60%.
Yeah.
But if the market rotates, the guys who are holding this other side of the plank, they will win. And these guys are going to underperform massively. And the market keeps, with change in macros, what works and what doesn't work, it keeps changing. So the best is to ensure that your portfolio is a blend. And whatever outperformance you generate, it comes at a stock picking level, not at these big, wild macro calls.
Yeah.
So this is an opportunity, nowadays, like last few days, when index goes to 21,000 odd and then goes all the way to 23,000 odd. Those are times when you should rebalance whatever you are stuck with. If you're stuck with past winners, you should use all of this to rebalance and get your portfolio more in the center.
Yeah.
So I don't know, for an existing investor to book losses and sit on cash becomes very painful.
Yeah.
But at least you should rebalance and make sure that your portfolio is not sticking in any crack or corner or crevice of the market.
Yeah, absolutely. And, there's also a big debate about India versus China, right? There's Indian investors who want to invest in China, and there is definitely a lot of capital which is going towards China. Where do you see the evolution of both these economies? Because at par, like, we seem to have the demographic dividend. We have so many things going in our favor versus China, which is clearly has all the pieces together, but a lot of things are not able to do well there because of the communist regime.
They should see everybody. When somebody makes you tackle your weaknesses, you should say thank you. You will not like it, but you should say thank you. So, if you see what the US is doing and what the leader, Mr. Trump, is doing, they are going to make China review their economic construct. Meaning that, say, for example, one of his pet peeves has been that the Chinese currency is artificially undervalued, which then encourages the American consumer to keep importing.
Yeah.
But it results in financial repression for the Chinese consumer. So the Chinese economy is, say, kind of weak on domestic consumption, but tilted in favor of industrialization and exports.
Yeah.
Right. And what is India's challenge? That, we, like he alleges, and like a lot of our people also who are in favor of competition, they allege that, we have, few people dominating large industries, and we have huge tariffs, and, we have import barriers, and we, we also keep the dollar, the rupee, like sometimes we allow it to float and sometimes we just prop it up, right? Keep it at 82 for a long point in time, those kinds of things. So what we are doing is that our economy is doing okay on consumption, but we are weak on competitiveness when it comes to industrials and manufacturing. So if the actions of the US are going to force people to go through some surgery and recalibrate, we should see the fallout.
Yeah.
Right? If you see, for example, in China, if they continue on this path, which is just industrialization, just exports and suppression or repression of the domestic consumer, they'll never be able to tackle the imbalance.
Yeah.
Correct? In fact, they might, if you really ask me, there might be a case that consumption might pick up, what people keep talking about China for so many years, it might be that they are forced to rebalance and consumption might actually pick up.
Yeah.
And in India, we are forced to reduce barriers, and some amount of competitiveness in manufacturing might set about. Correct. So I feel that right now there are many things which are changing, and I think some of it will be constructive. Going back to your other point, see, I think a lot of times people compare India and China on PE multiples. I think that's a wrong comparison. If I tell you that, see, $1 earned in China and $1 earned in India is the same. But if I tell you that $1 goes for $7 market cap, and this $1 goes for $20 market cap. So $1 is $1. Why are you paying $7 there and $20 here? So the first
That's
surface,
often the debate, right?
So the surface level understanding is that they are cheap, we are expensive.
Yeah.
Open and shut case. But then if I give you a moving picture that for last 15 years, the 20 PE guy is outperforming the 7 PE guy consistently for last 15 years. Now you can't say, no, I don't know that, wo sasta hai, tum महंगा hai. You have to dig deeper. So the point is that PE multiples are not just paid for this cheap and expensive wala thing. PE multiples are paid for longevity, sustainability, visibility.
Yeah.
And in the last few years, one of the learnings is that to be a capitalist, you have to be an effective democracy, right? Otherwise, PE multiples come into question, because if it is one person who's making or exercising authority, then you cannot attribute much sustainability or longevity to the earnings of companies which are subject to this decision making.
Yeah. In China's case, like tech billionaires disappearing overnight.
That was an example, right? And that was a great example you gave. And then, obviously there was statements that, no, these guys are important to us. They are our future.
Yeah.
So then the PE kind of came back, right? In India, what has happened is that through different types of governments, we've shown some, 12 to 13% nominal GDP growth, 12 to 13% corporate EPS growth. There has been some kind of bad times we grow 5%, good times we grow 7.5%. There is some method in the madness which has shown up, which results in higher PE multiples because, you would expect that a democracy will have higher PE multiples.
Yeah.
So I think, I'm not saying that you should be bearish on China. I think the reorganization or restructuring might give them another leg to their economic performance. But the valuation differentials can't get killed.
Yeah, I think markets overall just appreciate predictability, right? Which India is in some ways able to give. But having lived through multiple corrections and bear markets, what are some of your learnings and how should one think about going through a correction?
I was reading, sometimes these things just pop up. I was reading, there was a quote attributed to Robert Frost. He says that, in 3 words, I can tell you everything that I've learned about life. It goes on.
Yeah.
So anyway, your question was on market. So, see, all said and done, what we need to understand at a fundamental level, we are blessed to be in an economy. See, so easily, itna सहजता से हमने बोला कि 12.5% nominal GDP growth होता है 32 years का, 12-13% EPS growth होता है और 12-15% dividend yield मिला के equity Sensex Nifty का earnings है. So we say it so easily, right? We almost take it for granted.
Yeah.
But we are blessed to be in an economy where economic performance results in corporate performance. That's not to be taken for granted. Because if the economy is full of, like take an example, now ONGC is listed. It was a government department, it was not listed. It was Oil and Natural Gas Commission.
Yeah.
Right? It was not a corporation, not a limited company.
Yeah.
So what happens is that if your economy is riddled with huge private sector intervention, then economic growth doesn't result in corporate performance. But at least we have an economic structure which over the years has evolved such that economic growth results in corporate growth. Then come to the second point. Corporate growth doesn't have to result in shareholder wealth creation. It can just go to the promoters.
Yeah.
Right? You can, but we have law of the land. You have a Ministry of Corporate Affairs, you have SEBI, you have exchanges, you have depository, you have institutions like mutual funds and insurance companies and pension funds, right? So there is this whole framework which all of us have created. There is technology, there is surveillance, there is a thriving capital market. There is this whole ecosystem we have created whereby we are able to capture the corporate performance into the stock market right to the last guy's NAV.
Yeah.
Correct? So what I've seen is that ultimately our market performance is grounded in economic performance. Sometimes when market goes up 15-20%, people might think this is crazy, this is a casino. वो once in a while ऐसा impression देता है market. That is when, see, high volatility means that all market participants put together can't get their arms around what the hell is going to happen. That's why there is high volatility. High volatility only means that nobody is able to make up their mind that what the fair value is or what is going to happen. That is high volatility. That happens once in a while. But for the most parts, our performance is grounded in corporate performance and economic performance.
Yeah.
So when market falls 40% ना, मैंने क्या देखा है कि when market is booming, तो ये जो मैं बोल रहा हूँ ना वो सब लॉजिकल लगता है, right? I have seen that when markets are booming, लोगों का विजन मतलब प्रमोटर से ज़्यादा विजन शेयर होल्डर्स का होता है when the market is booming.
So true.
And when the market is bad, तो आप विजन छोड़ो, पास्ट को भी क्वेश्चन करते हैं, यार इसका ऑडिटर कौन सा बताओ यार, ये सब इन्वेंटरी रिसीवेबल था कि इसमें कैश फ्लो भी था कुछ, right?
So true.
So it's not so much the market. Market is doing the same thing for 30 years. It's just that लोगों का mood और trust. Trust is cyclical, mood is cyclical.
Yeah.
So that is what. See, people are quite funny, right? In March 2020, the market fell 40% because we believed case fatality rate will be 5%. Vaccine will take 10 years. Banks will go under. देखो माहौल कैसा था कि भाई अभी हम लोग डायनासोर है, ये सब तो कुछ बचने नहीं वाला है, राइट? सो बेचो, जो भाव आए बेचो, 40% डाउन तो वैसे ही होगा, अदरवाइज वाई विल समथिंग फॉल सो मच? डाउन सर्किट कैसे आता है? देयर आर ओनली सेलर्स. सो तब तो सब मान गए कि भाई दिस डजंट लुक गुड. अब आप देखो निफ्टी वेंट टू 8700 आई थिंक एट द वर्स्ट पॉइंट. तो सृष्टि, October 21 is not far. October 21 was just 1.5 years from the bottom. We made a new high of 18,500. आप सोचो 18 months 2.5x. हाँ, तो आप किसी को पूछो क्या हुआ, बोलेगा हम लोग अमृत काल आने वाला है. It's quite funny, right? I mean, me and you included.
Yeah.
We all are others. Other than Mr. Buffett, we all are others, right? So all of us included, people believed यार ये तो खत्म हो जाएगा सब. And then सब एक दूसरे को बोल रहे हैं नहीं, all trees are growing to the sky, क्या प्रॉब्लम है? तो चेंज कुछ नहीं होता है. वो मतलब ऐसा थोड़ी कि 1 rupee EPS became 4 rupees in a matter of 18 months. It's just that in March 2020 आप 1 rupee EPS को आप बोलोगे भाई ये 1 rupee पास्ट का भी क्वेश्चनेबल है, ये 1 rupee है भी नहीं कि पहले पता करो, राइट? एंड October 2021 आता है तो बोले कौन से 1 rupee की आप बात कर रहे हो, अभी तो 4 रुपये आप बनेगा EPS. सो इतना मूड चेंज होता है. आई थिंक दैट इज सो वी हैव टू कीप आवर मूड इन चेक. That is the most important.
Yeah, so interesting that you say that because there's also a quote, right, that stock markets are the longest running experiment in terms of understanding human behavior.
Yeah.
And what are the most surprising insights that you have seen personally after 25 years of doing this?
I had, there's one client who I've met recent last 5-6 years. I met twice and maybe had some Zoom calls, right? Very insightful conversation I had in May 2020, right? So see, I made a statement that mood or perception or psychology is cyclical.
Yeah.
And trust is cyclical, right? When the NAV is booming, you believe everything I say. If the NAV goes down, you say आदमी गलत है. It happens, correct? And it's human nature. I mean, because I claim to understand stock markets, so I will not react that way. But you tell me to deal in diamonds or something like that. So for me also the trust will be, if somebody says, "ये भाई इसका shine कम हो गया था," I'll say, "कौन था यार वो?" So it happens, right? Now, what happened was, let's say I was speaking to this person in May 2020. So they had invested in a small cap product, not in this firm, in my previous firm. Here, like I said, so $10 became 6 or 5 or something. I had never met the person. They had made, somebody met them. They had made a decision. They invested in January, February 2018. By May 2020, 10 rupees was 6 rupees or something. So I had to give all the explanations, that what is happening, right? Corporate performance, EPS, PE, whatever, everything we explained, that market has become cheap, but there is uncertainty, all these things. He said, भाई आप क्या बोल रहे हो, मेरे को कुछ समझ में नहीं आ रहा है. I am a fixed income investor, right? And मैं यहाँ पे आया कैसे मेरे को वही नहीं पता है. Right? So I don't understand. So I said that, see, look, you are in Delhi, I am in Mumbai. Eventually this will open up. You have my number, you have my name, my email, everything. Right? I have been speaking to you for the last 1 hour. Abhi, I understand why you're upset. And all these maths is of no use to you. I understand that. लेकिन आपको ये नहीं समझ में आ रहा है, ठीक है. लेकिन अब मैं बोल रहा हूँ ना, तो मेरे बोलने पे रुक जाओ, कुछ मत करो. तो ही सेड, हाँ ये समझ में आता है. मतलब तुमने इतना भाषण दिया ना, ये EPSP वो सब, आई डोंट केयर फॉर इट. बट अगर तुम बोल रहे हो कि भाई यू सीम लाइक अ गाय हु इज टेलिंग मी कि भाई ठीक है रुक जाना यार, मतलब डोंट पैनिक, राइट, एंड दिस विल पास एंड आई विल मीट यू एंड देन थिंग्स विल बी फाइन. I met the person 2 years back now in a different organization. He remembered what I spoke to him.
Of course, he would have made so much money.
Not so much money. It's just that sometimes you have conversations, you're just lucky, you end up having conversations which are insightful. And that teaches you a lot about behavior. See, people in our industry think that their job in life is just to deliver returns and beat the benchmark. What I have learned sometimes the hard way, is that hand-holding and communication, being consistent in communication. देखो क्या होता है, हमारे इंडस्ट्री में लोगों का मूड चेंज होता है. So, in our industry is very important. You can't be accountable. See, managing money and delivering returns is not just about the numbers. You have to make sure people are with you. And for that, managing psychology, managing emotions is important. So if I am a person whose emotions are going through wild swings, by seeing the stock market, for example. I mean, I may have other emotional moments, but I'm talking about the market. Then I cannot be accountable, or I cannot be responsible enough for ensuring that people, if I land up on TV or land up on any media and say different things on different days, ये तो सब खत्म हो जाएगा, this kind of things people say sometimes. You have to be real and measured. Right, so my learnings are more on the softer side actually. Maths is, it's well documented, 6 standard maths.
Yeah. How does one manage and regulate their emotions?
Should never be on the extreme. I mean, I've seen that, emotions get invoked when people are, people meet with extremes. Like greed and fear or envy, these are extreme emotions. So if you expose yourself to extremes, your emotions will get evoked. So when you're investing, make sure you're not on the extreme. Like, people put sab paisa small cap mein laga do, sab private equity mein laga do, sab real estate mein laga do, bet the house. So those are the times when you are playing on the swinging for the fences and you're on the extreme. And then something adverse happens, you'll not be able to handle it, and then the emotions will come out and then you'll make mistakes. So I think make sure you're not on the extreme.
Right. I think that was a fantastic note to end the episode with, Aashish. Thank you so much for being here today. It was a fantastic conversation that I hope the audience will learn a lot.
Yeah, I hope so. Thank you.
Thank you.